This is Bharat Jhunjhunwala, and I welcome you to my YouTube channel, Speaking Technically. As we know that, as you have been also, I know that you may have also been noticing that now this cloud charting or the Ichimoku charting is in fad, and it is gaining popularity, especially in the social media. You look at the Twitter and you look at the Facebook charts, and if you look at the Facebook posts and Twitter posts, full charts, and every chart is clogged with this cloud charting, and people are using cloud charting very extensively, and even now people have started coaching on the cloud charting also. Now basically, I thought that it would be a good time to introduce you to the cloud charting platform, and see how basically the cloud charting works. And you can use the cloud in multiple ways, and will be I think that it was the right time to bring this session to you. So basically, in this ongoing sessions, I'll take up this cloud charting thing with you, and this will be maybe I'll continue it for a month or so, and around 5 to 7 sessions to complete the whole cloud charting thing. And I would like to tell you that whatever we are going to discuss here in this session will be very in a very detailed manner. We'll go into cloud charting into a very detailed manner. We'll learn about each and every component very detailed manner, in a very detailed manner, and of course then we'll try to uh, implement every component in our trading, and see how the trading can, and how the cloud will benefit us into our trading. Now there's nothing wrong to learn anything new at any stage of time, right? If you have a system that is accurate, 60% of the time, or it is accurate 65% of the time, and you learn something more, right, and it adds 1% accuracy to your system, even 1% accuracy up to your system, right? So whatever, suppose your system was 65% accurate in the past. Now if you learn something and you have start implementing that, and it has increased the accuracy of a system by even 1%, then also I'm ready to learn anything. If my trading is improved by 1% also, I'm very happy to learn anything and implement anything uh, in my system. So it's never too late to learn anything, and it's never wrong to learn anything, right? So whatever we are getting on our way, we should embrace it, and we should start learning it, right? So let us start with Ichimoku cloud charting, and it is a very unique and powerful way of reading the current market behavior. As you have seen that the cloud charts are very colorful, and there are number of lines on the cloud charts, and it's a very unique and a very powerful way in which you can really read the current market behavior. Not only the current market behavior, it also tells you and gives you an idea of the momentum of the price, and of the sentiment in the future, right? It also tells you about the future, what the market may do in the future also. So it is a very powerful measure to measure the market sentiment, to market conditions in the present, and also give you a fair enough idea of how the market may behave in the coming days. So it acts as a leading indicator of potential future support and resistance. That's quite important thing here, that it acts as an leading indicator that will tell you about the support, future, and resistance level. The overlays are very easy, and it includes several indicators, despite it looks complex on the chart. So when you look at the Ichimoku chart, you will find it very complex. You will see 5 to 7 lines, running here and there on the chart, scattered all over, and it gets you confused every time. But when you learn about the indicators, they are very simple, and the overlay is very simple, and the usage of the simple overlays are very simple too. So once you have mastered the way, when you have once you have mastered the usage of all the indicators and all the overlays, it is a very great tool that will help you to determine the current market situation, as well as how the market may react in the current future or near future. So this is how Ichimoku charts look like. So you will see that there are a number of lines running everywhere on the charts. You can see zigzag here, and you can see some rising lines and some flat lines, and you can see the cloud. Now this is why it gets the name cloud, because you can see this cloud type of feature on the chart, and there are many lines. You can basically, if you can count, there are 5 lines, 1 2 3 4 5, that runs on the chart along with the candlestick chart. So it's quite interesting to look at the cloud chart when you are trading it. So whatever indicator or whatever system you may be using beforehand. Also, you may use Elliott waves, you may use RSI, you may use GAN techniques, and anything else or everything else. This cloud platform will complement any system that you are already using, and it will, I'm very sure that if you learn it in the right way, and if you can use the indicators and overlay in the correct way, it will surely, you know, boost your existing trading methods. So Goichi Hasoda was the man who has introduced this cloud charting, and he was also known as the Ichimoku Sanjin. And he, what he does basically, he has imposed five overlays on the charts, which are basically ranges of the price chart or moving averages. So there is nothing rocket science in the components of the Ichimoku charts, and there is no rocket science in deductions of those components. They are just simple. Either they are range of a certain number of bars, or they are moving averages. And if you know, the Ichimoku Kinko means a single glance, that when you look at the chart in a single glance, it will tell you whether the market is tradable or not, whether you are supposed to trade this market or not, whether the market is up, whether the market is down, or whether the market is in the sideways. So it tells you everything in a single chart, and it is a way of encapsulating the entire market sentiment and the future outlook on a single chart. So it does not only tells you about the current market situation, but it also tells you about the future market situations of the where the market may be ahead, in the future. So it's a very powerful technique, firstly, I must say. And secondly, this is one thing that many people won't discuss with you, because I don't know whether they read it somewhere or not, or whether they have read it somewhere or not. Ichimoku charting system was developed based on the daily readings only. So when this Goichi Hasoda, Mr. Goichi Hasoda was reading about, when he was developing the Ichimoku chart, he developed every indicator and every component, keeping in mind the daily preview of the chart. So I must say that it works very good on daily charts. But nowadays, if you look at the usage of the Ichimoku, it has not contained itself only on the daily chart. The usage have extended on weekly charts and sub-hourly charts, hourly charts also. So it's a good system, and it can be used on any time frame you want. But again, I don't want to tell you that no again and again, that as reduce your time frame. As you will reduce your time frame, your accuracy will reduce, your profits will reduce, and your stress levels will go up. So basically, we'll discuss everything on the weekly, daily, and hourly charts. And if you want, you can really change the time frame as you wish, because we have already made a time video on multi time frame analysis, how we can use time frames. And if you want, you can go to the playlist and find a video on multi time frame analysis also. So, what are the components of the Ichimoku chart? Basically, there are five lines. As I told you, there are Tenkan-sen, Kijun-sen, Senko Span A, Senko Span B, and the Chicago Span. So, these are the five lines. You don't need to memorize the terms, memorize the words. You can just either memorize the initials, and initially you may find it a little bit confusing, because these are new names altogether, and you do not find these very commonly. But as you start reading about Ichimoku, and as you start applying it on your charts, and using it on a daily basis, I think that you will be quite far comfortable with these things, these five indicators. You don't need to remember the names. You need to remember what they tell you. That's more important. The area between span A and span B is the Chikumoku cloud. The span A, span B is called the cloud, and the cloud is a very important element on the chart, because it is the single most important trigger for entering and exiting the markets. Now, the cloud itself is the most important component on the charts, and it is the single most element that will tell you about the market sentiment. It will tell you about whether you have to enter the chart right now or not. It tells you about everything, almost everything. So this is how the Ichimoku chart look like, and I have labeled all the components. Basically, as I told you, that we have this Chicago span, we have this Tenkan-sen, we have this Kijun-sen, the span A, the span B, and we have this Kumo, the cloud, between the line between the span and span B. It's quite simple And when you apply this Ichimoku chart on your charts, on your candlestick, you can really look at everything. And I tell you one thing, that it can be found on any standard software. If you're using Zero Dha, you'll find it on Zero Dha. If you're using TradingView, you can find it on TradingView. On any standard software, you will find this cloud charting. So first, let us discuss about Tenkan-sen, and let us discuss one by one every component of the Ichimoku charting system. So Tenkan-sen is calculated by taking the mid-range price of the last 9 periods. So we have last 9 bars here. You can see there are 9 bars. We take the highest high of the 9 bar, and we take the lowest low of the 9 bar, and then we divide it by 2. So for on this 9 day movement, the seventh bar has the highest high, and the third bar has the lowest low. So we take this and we divide it by 2 to get the mid range, and this is how the Tenkan-sen is made. So again, this is the Tenkan-sen line. You can see the blue line is the Tenkan-sen line, and this has been derived by taking the mid range of the last 9 bars high and low. And it's quite simple in formula, and you can see, you have to notice something on this chart, that how the Tenkan-sen is behaving with the price. If you can see, it is very close to the price, and it keeps swapping with the price up and down. And you can see that there are number of whipsaws also with the price. So, and one more thing that you can really look at is that the Tenkan-sen is close to the price, and there are number of whipsaws and overlaps. So what you can make out and what you can deduce of this Tenkan-sen, that it cannot be used as an entry or exit trigger, because it is very close to the price, and it will give you a number of whipsaw, and again it is overlapping with the price number of times, right? So it cannot be used as an stop loss also. So I know it's quite too early to discuss these things at this stage, but I would like you to develop a thought process in the way that I am just trying to tell you. Because whenever you see a chart, or whenever you see an element, or whenever you see an indicator, the first thought process, the first thing that you have to keep in mind is to think of where it can be used. Whether it can be used as an entry exit indicator? No. Why not? Because it is very close to the price, and you see a lot of whipsaws and overlapping. Number two, whether it can be used as an support and resistance or a stop loss indicator? No. Again, for the same reason, very close to the price, and there are number of whipsaws. So it cannot be used for the these two elements. Now again, the same thing I have written here. The Tenkan-sen lines are very close to the price, and TS lines overlap price with each other on multiple times. So they cannot be used as an entry exit trigger, nor they can be used as a stop loss. Now if you can compare the TS line with the 9 period SMA, you will see that the 9 period SMA is quite more smooth, and both are almost complementing each other at various places. But again, they are both very close to the price, and whereas Tenkan-sen get flats somewhere. At many places it get flats. There is a but 9 period is not getting flat in many places. So this just a comparison, does not have any significance with your trading. But I just wanted to put on a comparison between the TS and the 9 SMA line. Now let us discuss about the Kijun-sen. Kijun-sen lines is calculated by taking a rolling mid range of the last 26 periods. So in the Tenkan-sen, we were taking the rolling mid range of the last 9 periods, and similarly in Kijun-sen, we take the high and lows of the last 26 periods, 6 bars, right? So we take the highest high and the lowest low between the last 26 bars, and then we divide it by 2, and then we get the mid range, and then we calculate the Kijun-sen. It's quite simple. Now this blue line on the chart is the Kijun-sen, and the brown line on the line is the Kijun-sen, sorry, and the blue line is the 26 SMA. Now what you can read with the Kijun-sen, and what you can see how the Kijun-sen is behaving with the price. Firstly, you can see that it is not as close as the Tenkan-sen was. Secondly, it does not overlap the price too often. So what we can deduce, or what we can um, consider from this behavior of Kijun-sen, that it can be used as a support and resistance or a stop loss, and secondly it can be also used as an entry or exit trigger. So quite, this is the way you have to deduce the functions of a indicator. So the KS line gives price some room. As we know, the crossover the price and KS line takes place less often, that we have seen on the charts. The overlapping takes place less often, and at places the KS lines almost gets flat. Now this is very important thing. You have to notice that at times the KS line gets flat. Now what is the implication of this? We will discuss it as we move forward in the course, TS lines can be used as support and resistance. We know that if it is away from the price, if it is not overlapping the prices multiple of number of times, then it can be used as an support and resistance. Good support and resistance, of course. Now, friends, one special announcement that I want to make. Many people, many of now you were asking me about my workshop in RSI, and do I use any paid courses. So friends, I have released my RSI transform workshop. These are videos, basically pre-recorded videos that you will get, and you will be able to download those videos, and you will be getting our special player also, and you will be able to install those videos in your local hard drive and watch them any number of time for 6 months. Along with that, you will get full support on WhatsApp. We have a WhatsApp broadcast for our transform participants, and we provide full support there for 3 months. And we make sure that trading setups or the trading analysis reaches you before the market opens, and you can also track them as these trades move. So everything will be based on what we have learned in this workshop. So it's a quite extensive and very detailed workshop from RSI, and it's meant for only pro trading. So if you are really interested in pro trading, and if you are really interested in making trading as your full-time business, that only you are requested to go for this program. Otherwise, you should be very happy with whatever you are getting in our YouTube channel, Speaking Technically. That's almost sufficient if you don't want to get very serious with trading. So but if you want really to get really serious with trading, if you want really to earn that type of money, then this is then you can just have a look at it. I'm not telling you that you have to do it. Just have a look at it and see whether it suits you or not, right? And also, friends, if you are watching this and if you haven't subscribed us right now, this is the press the subscribe button to subscribe to our YouTube channel. If you have liked the content, please take little pains to hit the like button, and also share this with your friends on Facebook, on Twitter, on YouTube, on LinkedIn, on WhatsApp, and on Telegram. Please take some pains to share this channel and this contents with your friends, because these are the contents that you have to pay to learn, right? And we are bringing everything for you without any cost. So we have to set up a team here. The team is sitting here. They edit the video, they post the video. So if you like, if you share, and if you subscribe, they get boost up, they mentally they get pepped up, and they work more hard to bring this type of quality material to you. And you may have noticed that there is a bell icon beside the subscribe button. Just click the bell icon so that you receive instant notification whenever the video is released. Now guys, this is my Twitter ID at Bharat J82. Now this basically what I do, I put up trade ideas, I put up setups on my Twitter ID at Bharat J82. And if you want just to look at what I'm looking at in the markets on a particular day, you can just follow me at my Twitter handle. It's Bharatj82. Now let's get back to our topic, and we'll discuss Senko Span A. Now what Senko Span A is? Basically, Senko Span A, how it's calculated is now this is interesting. Now the things are going to get interesting right now, because the calculation is getting little bit of uh, what to say, let's call it interesting only. So Senko span is calculated by taking the average of the Tenkan-sen TS and the KS Kijun-sen and plotting it 26 period into the future. Now this is the twist. Now this is what he has done differently. Now he has taken the Tenkan-sen and he has taken the Kijun-sen. Now he has averaged it, and then he has plotted the value ahead, 26 bars ahead of the 26 period ahead of the last bar, right? So let us see what he has done. Now you can see this is the Senko span A, and it is far from the price, right? Far from the last price. So it is 26 bar ahead, 26 day or 26 period ahead from the last bar, right? So how it calculated it? Basically, on 13th September, he took the value of Kijun-sen, he took the value of Tenkan-sen, he divided it by 2, and then he plotted the value ahead, 26 days ahead of the 13th September. So what the value of Kijun-sen plus Tenkan-sen divided by 2 on 13th September was plotted on 23rd October. That is ahead 26 days. Now this is the way it has done. Why he has done this? What is the reason behind doing that? We will discuss each and everything. Just give us some time, because if I am going to teach you something, be sure that you'll get everything inside out. Because I believe that whatever you are using, you should know it very deeply, right? So this is the way Senko Span A is plotted. So the Senko Span A further provides extra room to the price than KS and TS. As we have seen, the KS and T, it is more farther than the KS and TS. You see, this is the KSTS line, and they are quite close to the price, but Senko Span is even further from the price. And when the KS and TS contracts, the Senko Span comes close to the price, and vice versa. Now this is another important observation that you have to make here, that when the KS and TS they contract, so this is the KS and the TS, when they contract, right, when they are contracting, the Senko Span A comes closer to the price, right? But when they expand, at these points they are expanding and it moves farther from the price. Now that is the significance of this observation. What is the significance of this observation? We'll be surely discussing it with you, because if you don't know the significance of this observation, you won't be able to trade with the cloud. So it's very important to know the significance of every observation, and it's very important to absorb the right everything. So what we have seen here, when the price contracts, when the TS and KS contracts, it comes closer to the price. You can see how it comes to the price, and when they expand, it moves away from the price. And this is the part of a cloud. Now this forms the cloud. This is a Senko Span A. So guys, this was it for today. In the coming session, we'll discuss the Senko Span 2, the Chicago Span, and the time displacement and everything else. If you have really liked it, again, if you have really liked it, please hit the like button, share it with your friends. Until that, keep earning, keep learning. This is Bharat Jhunjhunwala signing off. Jai Hind and Jai Bharat.